Good evening, ladies and gentlemen. A very warm welcome to each and every one of you, and thank you for joining us today for another engaging edition of IACC Thursday Insights. I am Parvasha from the Indo-American Chamber of Commerce West India Council, and it is my pleasure to welcome you all for today's webinar on EPFO 3.0 Hype, Hope, and Historic Reform. Before we begin, I would like to extend a warm welcome to our IACC WIC leadership who are the ones driving this initiative. First, our president, Mr. Raghavendra Pongshe, a second generation entrepreneur and a distinguished intellectual property advisor. Next, we have with us our vice president, Mr. Tejinder Pal Singh Oberoi, executive director at Signet Infotech. He holds a background in IT entrepreneurship and extensive experience in leading technology firms. We are honored to have with us our esteemed panel of speakers, Mr. Govindaraju, Managing Partner of Renaissance HR Solution and PNG Advocates, along with which he is the President of Tumakuru HR Forum. Mr. Madhukar Rao, former Enforcement Officer at the Employees Provident Fund Organization with over 25 years of distinguished service. Mr. Prakash Prabhakar, CEO of Karma Management Global. We are equally delighted to have with us Mr. Prateek Vaidya, National Executive Council member of IACC, who will be moderating today's panel discussion. To all our members, industry professionals, HR leaders, legal experts, entrepreneurs, and the guests joining us from across the country and US, thank you for taking your time with us. We truly appreciate your continued support to IACC Thursday Insights series. Before we begin, we encourage you to post the questions in the Q&A or the chat box throughout the session, and we will take up the questions at the end. With that, it's my privilege to invite our regional president, Mr. Raghavendra Pongshe, to deliver the welcoming address and formally inaugurate today's session.
Thank you, Parva. Namaskar. Good evening, ladies and gentlemen. A warm welcome to each one of you to another edition of IACC Thursday Insights. It is a pleasure to see such an enthusiastic gathering of industry leaders, HR professionals, legal experts, entrepreneurs, and members of the business community joining us from across the country and the US. On behalf of the Indo-American Chamber of Commerce, West India Council, I extend my heartfelt gratitude to all our participants for taking the time to be with us today. I would also like to extend a special welcome to our distinguished panelists, Mr. Govindaraju, Mr. Madhukar B. Rao, Mr. Prakash Prabhakar, and our member of the National Executive Committee, Mr. Prateek Vaidya, who will be moderating today's discussion. Thank you all for being with us and sharing your expertise with our audience. For those joining us for the first time, the Indo-American Chamber of Commerce has for nearly 5 decades served as one of the premier bilateral business organizations dedicated to strengthening economic, commercial, and strategic ties between India and the United States. Through policy advocacy, business networking, trade facilitation, and knowledge sharing initiatives, IACC continues to create meaningful opportunities for businesses of all sizes across sectors. One such initiative is IACC Thursday Insights, our knowledge-driven webinar series designed to bring together subject matter experts, policymakers, industry leaders, and practitioners to discuss developments that matter to businesses. Guided by our philosophy of insights, ideas, and impact, these sessions aim not only to inform, but also to encourage meaningful dialogue and equip organizations with practical perspectives that they can apply in an evolving business environment. Today's topic, EPFO 3.0, Hype, Hope, Historic Reform, is both timely and significant. India's employment landscape is undergoing rapid transformation, and with it, expectations from our social security systems are evolving. Questions around digital transformation, ease of compliance, improved service delivery, faster claim settlements, enhanced transparency, and future of employee benefits are at the top of the mind for employers and employees alike. While these reforms present exciting possibilities, they also raise important questions. What do these changes truly mean for businesses? How should employers prepare? What opportunities and challenges lie ahead? Today's discussion will help us move beyond headlines and understand the practical implications of these reforms from experts who have deep experience in the field. I wish you all an engaging, informative, and thought-provoking session. With that, it is my pleasure to hand over the proceedings to our moderator, Mr. Pratik Vaidya. Thank you. Over to you, Pratik.
Thank you, Raghavendra, very much. And good afternoon, ladies and gentlemen. It's been a pleasure on behalf of Indo-American Chamber of Commerce, West India Council. And it gives me immense pleasure to welcome all of you at another actually edition of Thursday Insights at 4:30 p.m., which we do every Thursday or every alternate Thursdays and bring out a lot of meaningful conversation, debates, topics, including today. So a very welcome once again to our all distinguished panelists, industry leaders. I'm sure a lot of HR professionals have joined, payroll experts, maybe legal and compliance professionals, and of course, our own members of the chambers. So thanks everyone to join from India and overseas as well. So yeah, as Raghavendra was telling about that today's subject is 3.0, EPF 3.0. What is 3.0? So before we get into the discussion, it is important to understand that this EPF 3.0 and the new EPF schemes, which is EPF scheme 2026, a pension scheme 2026, and EDLS scheme 2026, they are related but not the same. So EPF 3.0 is a transformation journey, while EPF, EPS, and EDLS schemes are notified under Code on Social Security, which I'm sure you must be aware, which provides a legal framework for that transformation. Now, if you see, this journey began in October 2025 as far as the transformation of the PF portal is concerned, especially PFO 3.0. And this was based on the approval of EPFO digital transformation roadmap. It enhanced the new phase when PF, EPS, EDLS schemes came into force on 1st July 2026. And since last fortnight, we're supposed to see faster digital service. They get almost 15 days, right? Faster digital service, greater automation. We thought that, okay, now things have changed, but a lot of challenges that accompany any transformation in this scale, Interestingly, everyone seems to be talking something very different. Some believe it's AI. Some believe it means UPI-based withdrawals. Some believe it's just a facial authentication using Umang app, or just a simply better portal. Others believe, oh, it's a big transformation in India and into especially India's social security ecosystem within decades. But interesting part, which I tell you, well, everyone is partially right, but nobody is looking at the complete picture. And so today, my objective is not to convince that EPF 3.0 is a success, not success. Now I'm here to convince that it is overcomplicated. My endeavor in next 15-20 minutes before I open the panel discussion is much simpler. First of all, to separate perception from reality. Second, to understand what has genuinely changed. Let me just bring out some information on that. Then, to appreciate what has genuinely improved, which we've seen that in last 2-3 months while the transition is happening. And also to recognize where practical challenges still remain. And then I'll open the floor for more panel discussion and questions also from you. And finally, we should ask whether the organization are truly prepared for the next phase of this Social Security Administration. Today is PFO, tomorrow it may be ESIC as well. So let us see the complete picture. So after my talk, I will also have the privilege of already inviting our distinguished panelists for kind of a round of some questions, answers from them, which we seek out, each bringing a very, very unique perspective from compliance, people who have worked in the administration inside out, and from the industry to help us enrich our discussion further. So can we have the presentation, please? Vishnu or Prahlad, can we have the presentation, please? Sorry.
Sir, you can share, sir.
All right. Thank you so much. Yeah. Yeah, if you can go to the presentation mode, please. All right. Next slide. Okay. So let me begin with a simple question. EPFO existed since 1952, right? PF is not new. And pension is also not new, EDLI is not new, claims are not new. Even so long as your transfers are concerned, it's not new. So why suddenly 1st July onwards, everyone is discussing about EPFO 3.0? What is it about? HR business. So I believe that the answer lies in one word, which is the expectations. So employees today are expecting banking-like experience, like a UPI, or earlier they were trying to say that if they get a card, they will be able to withdraw. Employees are expecting some digital simplicity. Payroll teams they're expecting predictable systems, so they can see the dashboard and all. Government, what they are expecting is a cleaner data and greater transparency, especially from employers who upload the salaries and everything. Business leaders, they expect governance with minimum friction. They don't want to get into the rigmarole, all the issues and actions. Technology providers expect automation. That can we connect the EPFO 3.0 with our systems and so on and so forth. Well, this all expectation converge together, even a feminist institution. EPFO not mere just changing technology, it is more about changing expectations. So there are many stakeholders here. Which I will tell you. When you say every stakeholder wants something different, government wants transparency, employers want simplicity, employees want speed, payroll wants stability, technology wants automation, and multinational organizations, especially our own members who are in India, in US, and they have employees working from India to other countries, including US, or some countries employees who are stationed here in India, particularly around international workers. So each expectation definitely it's legitimate, what I would say. So I would say that what is actually changed here. So wherever new reform is introduced, the first question people ask is what is new. So I think it is a very wrong question as per me is concerned. The right question or better question which people should ask, what has fundamentally changed here? You see, EPFO represents these 6 fundamental shifts. First of all, it is digital first, which is very important to know. It is the automation, which they're trying to make the workflows and automation in the process. Identity is improved, that Aadhaar linked identification with the OTP, correct employee and the person, rightful person actually gets logged in and all. Governance is what they are saying, that every action which is now there, is it proper or not? Integration, self-service, more to use Umang app, more they can withdraw the things around it. The service counter is increasing, moving from going to the PF office to the member's own mobile phone. And that's what they are eventually changing. So routine processes, if you see, are expected to become rule-based rather than manual. That's what they're saying. So identity through Aadhaar and UN is becoming central to the ecosystem when we talk about identity, right? So on and so forth, systems are gradually becoming more integrated. But the biggest challenge and change is therefore not the interface, it's operating philosophy. So earlier we revolved around the documents and all. Still, there were people who were submitting claims offline, online, nomination forms were offline, online. Now slowly nomination forms, claim forms, everything will become digitized and online. So Early, the identity belonged to the establishment. Now it is to the member, which is they are trying to see. Earlier, you used to if you have to withdraw claims, you need to ensure that the employer signature or banker signature is there in place. But now, no, it's everything is online. You can also withdraw. You don't need signatures from the employer and so on and so forth. So this is very important. Let's look at the employer lens, what it is, because ultimately every reform succeeds or fails at employer's desk. So let me acknowledge something very important. So there are genuine improvements. I believe that over the last 3 to 6 months, digital visibility has improved. Many services have become faster. I would not say it is like rocket speed and all. Physical dependency have reduced. Like people don't have to go to PF office to do a lot of things, and employers have greater access to information than before. So these are like significant, you can say, achievements which everyone acknowledges. In my opinion, this 3.0 is not reduced employer responsibility for that matter, but it redistributed the responsibility of the employer. So, but most important part is that employers still struggle with the whole big paperwork. Correct Aadhaar at the time of joining, the correct Aadhaar is not there. Correct UAN mapped is not there. Mobile number is not there properly. Date of joining, the content is not put properly. Date of exit is not put properly. Bank details, something missing. Correct KYC of the employees is not there. Wage mapping, now with the new wage code and labor codes been implemented, the wage mapping has to be very accurate on the 3.0 portal. And that are the issues which are there. And these are things. I'll give you a practical example. Say, for example, if if an organization has, say, 10 employees a month, the process is manageable. You just upload things every month. But imagine a staffing company or a large manufacturing unit or a retail chain or maybe logistics company. They have hundreds of thousands of employees who join every month. And now every employee requires Aadhaar authentication. Any employee do not have access to their mobile number linked with Aadhaar. So many, deposits of PF are unclaimed and they cannot deposit. You have deducted, but you cannot deposit those. Sometimes the mobile numbers of the employee itself, because of the prepaid card, they just changed. So sometimes Aadhaar themselves are incorrect the way it is. So technology has certainly become faster, but the margin error has become so small. And the new reality the employer must be preparing. And there's a big shift here. Technology has reduced paperwork, yes, but not reduced accountability. In fact, it is ensuring that organizations to ensure that they do the KYC of the employees when they join, when they are being interviewed, right from that point, and not when the employee is starting to leave. So that's the important part which the employer has to understand. At the same time, when you talk about employee lens, when it comes to the EPFO 3.0, every social security system ultimately exists for one reason: to serve the worker, right? His social security benefits. And I think we must acknowledge that employees whose records are complete, and I've seen that in our own practice, in fact, they experience a better services, a faster claim process or advanced process than it was like a decade or 5 years back. So claim has become faster, digital access has become improved. Members can see more information about themselves when they log in through Umang app or log in through the things. So those things are very important. Now job change also become transparent and smoother. Like you just file a form 13 whenever you change the jobs, and everything is automatic. So this is good. So let me just give you an example. Like suppose an employee, he has worked in 5 different organizations in last 15 years. One employer has entered a correct date of exit, and one employer has just enter very incorrect date of exit. That's a big issue. Or someone has incorrect name itself when they are logged in. So one establishment has not completed KYC, another has not updated service history. The present employer has done everything correctly, and yet the employer faces huge issues in transferring the claims and all. So technology processes go to the entire employee history. PF has done its way, but we have to ensure that it is up to the employee also to ensure his responsibility is that whenever he moves into jobs, he has to ensure his names are corresponding to his bank account number, names is corresponding to the Aadhaar numbers and all. And then he simply cannot blame the organizations of past or the current organization that my claims are not transferring and things around it. So, to let me just tell you that to the employees who are listening to this, a fast claim is not created on the day the claim is filed. It is created when you, as an employee, joins. So every correct record creates today to save a dispute tomorrow, and that is very important for a large employer also having loads of like a manpower supply company or housekeeping company who have relatively undergraduates or 12th pass people employees who join them. Their those documentation has to be ensure that from day one the onboarding has to be very good. Otherwise, you will have keep on getting into issues. See, when technology comes, it is more visible. The more errors can come, and you just cannot blame EPF or blame things system that doesn't work at all. So let us see the other lens, which is like a government lens, which they say. What does government want to do? Just few slides more, just before I open the things to my panel here. So, the government's perspective is to manage social security for crores of workers. Imagine, it's like huge number of workers, crores of workers, and one of the most complex administrative responsibility in the country, apart from others, to manage social security. So, digital governance is no longer an option. It is very much essential. Your identity verification is important. Transparency, audit trails, very, very critical. They need to ensure that they have better analytics for fast delivery. So these are all legitimate policy initiatives. Uh, in many ways, PF is evolving from an administrative organization to a digital public service platform, and that's what they want. Whether it's platform, whether it's Umang app, they just want to ensure that they are really doing good. They deserve appreciation for sure, but also changes the entire compliance. And again, I'm reiterating, it just begins with your data, your payroll, your contribution history, your KYC, your wage pattern, your digital footprint. So regulator of tomorrow will probably understand your organization through your data and not from physical records. The next gen of your PF inspection not going to happen physically at your doorstep or the employer doorstep. It is going to happen by way you organize your data. So the authorities, they know your organization through your data than your physical records. That's very important. So a future compliance professional, which is there, will spend less time organizing the files and much more time ensuring that digital data is clean, complete, and reliable. So in a one word, if I say, your data has become compliance, and that's very, very important to see. Let's see something which is good. I feel here. I always believe that a balanced discussion should begin by recognizing what a good the portal has over last 1 year, 2 years, and generally improved. The direction of travel, if you see, is undoubtedly a positive. The digital accessibility has improved, member visibility has improved. I'm sure you'll all agree to that. And by far large, because of UN in place, a lot of the duplicate account number which you have earlier issues, they have really reduced to a larger extent. Claims are becoming faster in eligible case and all. And physical dependency has also reduced. A lot of times, most of the times, employees do get answer when they are actually raising ticket also online. So they are meaningful achievements. I'm not denying that. No? Major reform also has a transition phase. This was launched on 1st of July or 29th of June to be saying that. And people expected immediate change and all. It is a transition. A lot of still claims are still stuck because people the government is transitioning. While members portal you may be able to see, but the government's portal and the PF officer and or the clerk who handles your account is not able to transfer things around it. So it's a kind of a transition which we have to see. Let's see the reality check. What is not so good? The previous slide, please. Previous slide, please. I would not say okay, what is not so good. I would say more of what is the reality check here. Every digital reform has period where experience inconvenience before they experience the benefit. So we always see, if the road is under construction, inconvenience is regretted for a better tomorrow, right? So I believe EPF 3.0 is also passing through that phase. A long-term directive is very much positive. Transition real. So we are seeing practical operating challenges during these transitions. Claims are really getting delayed. Transfer cases are taking longer than expected. At least I've seen last 1 or 2 months, which I've seen. Backend process still stabilizing. The people are not able to prove challenge. The portal is always down around 13th or 14th of the month and all. So it's getting taken. I don't think so. It is a failure of EPF 3.0. I would say it as more of an operational cost of transformation. And which is every organization, even they go to through a transformation, it inherits something called as operational debt, and that is what it is. So your old records, imagine in PF office, legacy records are there, old KYC issues are there, their form 9s are there in place, which are all physical files which are there, and those trust transfers which are there, which is not part of EPFO, annexure K issues are there, pension linkage is not happening. Those are problems were not carried by 3.0. They're trying to modernize it, but employees' reality also you need to acknowledge, because at their end, a lot of things are not proper. So business timelines, of course, do not stop. Payroll cutoffs remain fixed. Joining dates remain fixed and all. So employees continue to expect answer, right? A retiring employee cannot be told that you please wait for definitely or 2 years, 3 years. And imagine a family nominee, he has to wait for a death claim, and he cannot be simply patient, right? So transitions, real, yeah, issues are there, but technology has made speed possible. It has not made complexity disappear, and that's the biggest important part. Complexity is simply shifted here. So technology, upgrade of technology does not improve or solve poor compliance. It just exposes more. So we are here where it will expose more. Not problem, not criticism, but generation of conversations we'll have, that what is that we still require and how collectively we have to think what we should do it. Let's go beyond the headlines. What are the gray areas which we try to do? So the gray area is very important, where every HR head, every payroll manager, or every compliance officer, it starts with the simple questions. Has the employee claim settled today? Has the transfer gone through? Why is this KYC pending? Why is this member getting error despite everything appearing correct? Or why is that pension case still pending? And I've seen this contractor's ECR, it doesn't reflect. So these are all operating questions and not legal. And I think EPFO ultimately is going to be judged how effectively all the day-to-day operational issues or questions are handled well. So that's very important. And let's start with this claims part, which is going to be important. And this is the biggest public face of EPF, right? Claims for an employee. Claim experience becomes the perception of entire organization, how quickly you are able to settle the claim, right? But I would like to make one distinction, or distinction, I would say. A claim is not an event, it is an outcome. It is an outcome of every correct decision taken during employee life cycle, and the duty is bound to not PF office, but to employer and employee both. They are hand to hand in this, and they need to ensure that correct onboarding goes, Aadhaar goes, KYC, UN, correct wages, nominations, everything. Employee also need to ensure that when they change their marital status, whether they're getting from single to married or married to divorce, or some of the spouse say expire, the nomination details have to be updated. If you don't do all these things, you can't expect even 3.0, 4.0, 5.0 EPF to really help you with the situations. So if these foundations are very much right, technology performs well exceptionally well. But if the foundations are weak at the employer and employee end, it will just simply expose and it'll all stuck. You cannot do that. You cannot go to PF office earlier you used to do and just manage it. It will not happen. So how do we improve claim settlement here? My answer is very simple. Do not begin at the claim stage. As I told you, begin at the day of employment. And that's just this thing which I'm reiterating again and again, because we face this in our whole 25 years of experience, the same thing. So if you want a fast claim today, okay, within a week, which the PF promises, it is created when the employee joins. So that's what we need to ensure. Same goes with transfers as well. Your NXA, trust transfers, multiple member IDs, incorrect service history, missing pension services, which we've seen in some of the organizations, large organizations which work. These are all the issues which are there. So I believe there's a big difference between a system capability and data quality. So system is today is capable, maybe, but historical data is still catching up. And I think EPFO 3.0's success would be that how good, well, employer and employee collectively ensure that the data at their end is corrected well of the history of the past, which enable the PF system also to work much more faster, because historical data has to be corrected at both the ends. So only a good governance can transfer clean records. That's what I believe. If you see, KYC is a most crux part, and I'm repeating the same thing again and again because I really want to tell you that this deserves a very much higher attention, and especially in the next few years, it is the identity. Unfortunately, yes, Aadhaar is one of the identity which is there. Joining, claims, pension, profile correction, everything, even in contractor. Now, contractor information also has to be up. The employee has another. Technology simply exposes those differences. One contractor employee and has certain UN, they have two UNs, this all has to be corrected. The move towards new UN generation through Umang app is a progressive step, which is there. However, new digital initiative, the implementation on the ground just throws up practical questions. How will employers still manage large-scale onboarding? And I would want to actually ask our panel members that how are they facing the challenge, and what do they do that if the Aadhaar mobile linking number is inactive and all, and what to do in those cases. So so on and so forth. Let's talk about what do we say about beyond PF. Let me just rush through the slides of the beyond PF, which is there. So if you see, PF, of course, it has three schemes: Employees Provident Fund, Employees Pension Scheme, and Employees Depositing Insurance. But the ecosystem is much more larger than the three schemes itself. You have seen this. There have been employment initiative schemes such as PMRPY and ABRY, also introduced by government. It's more about retirement schemes, retirement savings, monthly pension, promoting employers to actually recruit more. Unfortunately, issue is that awareness of some of the major schemes of PF, and for that matter, anything, remains very limited. Many of the employees, you won't believe, they're not aware also what is EDLI. And until an employee of that particular company, and they have unfortunate incident which takes place, employees still do not know how this pension whole calculation works. PF is much more transparent. They used to get earlier slips, now they get it online on the the portal as well as the Umang app, but they don't know how the PF pensions they actually work. So awareness is equally important, and I think a dashboard should be there for the members portal in 3.0, because benefit people can understand through the awareness itself, which I believe. Let's talk about international workers because we have a lot of members who are part of Indo-American Chamber of Commerce. And a few minutes, let me just, this last couple of slides, in a few minutes, let me finish this on international workers. Really, very critical about it because it is a very important business topic. It is very important boardroom topic, I would say, when you are hiring international workers in India or you're sending your people out there. Let me explain to you kind of two scenario practical examples here. Imagine Indian engineer is deputed to Germany. I'll give an example of Germany. Okay, so India has a social security agreement with Germany. Okay, and subject to the condition of the SSA, employer can obtain a COC, certificate coverage. The employer may continue to remain under Indian social security system, which means that he continues to contribute to his PF here, and he will not have to do social security system or contributions at Germany. So that's what happens. So that is the whole good benefit. They have not been taxed so much on that. Now let us just change this fact. Imagine the same engineer is deputed to US. Okay, India and US do not have the SSC as of today, and immediately the entire discussion changes, right? Like employer has to evaluate Indian PF obligations, then US Social Security, that Medicare, payroll structure, those tax implications in US, then the assignment terms and overall costs and all. So employee is same, employer is same, but destinies change, and that's the reason compliance strategy has to change. And even for the CFO, the whole financial implication can be very different. So let's see, reverse that. I've spoken in earlier also. If US citizen joins Indian establishment or an overseas citizen of India takes up the employment in India, what should be the compliance? First of all, let's see what are the OSCI, is the employee and OCI, whether the compliance will be applicable there or not. So the first question which every payroll or every HR should ask is that what is the person's nationality? It is employment arrangement. What is the social security agreement which is there? Which country he comes from? Whether that he comes from the country, whether he has a valid certificate coverage from the embassy or not embassy. Those are very, very important. So as Indian companies, they expand globally, and multinational countries, multinational companies, they keep on investing in India. International worker compliance is very much important. For the organizations who do not have IW at all, you still need to file a nil IW return. This is very important. And that also now everything is online. So where does this all leave us here? I would say that EPF is a changing way Social Security administered. And let me just conclude with few practical recommendations, which I would say, what should the organizations, companies do tomorrow or today? What can say? Reiterating these things, very important on those particular slides, that you need to do not wait for the claim to fail before correcting KYC. Check for duplicate record, check service history, check your exits, check Aadhaar linkage for the employee. Do not recruit or do not select the employee unless all the things are checked, and then only you give the offer letter or appointment letter, which is very much important, because if then you realize after the end of the month, his data is not good, and then he becomes like a skip challans, and that is really wrong, because if you are deducting an employee's salary and deducting PF and not contributing the biggest crime. So those things are important. So, and especially if you're organizing international workers, review their like mobility policies, which SSA is there, what is the position. If they're coming from there, they should have the certificate coverage and endorsement from that embassy from which the host country they're coming from that. So those things are important. If they do that, then they do not have to contribute PF in India. And that will save a lot of bucks, because PF is on complete full basic of the international workers you deploy. So those things are very, very important for you. Last but not the list, I know that 3.0 was just coming 1st July, but if at all 3.0 has to be done better, or I would say 4.0, I would say that a truly integrated system, Social Security, a secure API can happen with payroll platforms, which I think is really missing. can we have bulk employer workflows for onboarding? Like ESIC does have that, but PF doesn't have. The Aadhaar UN has to be really created. And smarter exception handling instead of just generic message. Oh, it is stuck, or you need to come back later, and something like that. And most important thing, I feel the EPFO 4.0 or just 3.0 enhanced should have better communication during transition periods, more of a dashboard, predictive compliance alert should be there. Employees can understand this change if these alerts are there, that your Aadhaar name is missing, or your it's mismatched with the bank account numbers and all. So what becomes difficult here is uncertainty. Today, even if you have EPF 3.0, if there are uncertainties, if the employee is not made aware, then another issue here, right? So he'll always feel, okay, what is the use of 3.0? My claim is not yet settled. So with that, I think I would like to conclude that every reform different depending on where we stand. So government will see the policies, employer will see the implementation, employee see experience, and how good and how fast the things are there. Advisors like us, we see interpretation and industry, they see, and the governance model for how it is. So, so that's where, in fact, and I think you can unshare it. And I hope my talk, which was to be there for 25, I did just extended her, but I hope you gathered what I wanted to actually share, the practical nuances of the experience out here. Let me just now start. And you may be having many questions, and I would want you to actually put the questions here. Whatever you have the experience, if you want to share, or you have any questions regarding the EPFO 3.0 or social security. So we have Govindaraj. Of course, you've been introduced, but reintroducing. Hi, Govind. He's a compliance expert, trainer, a well-known YouTuber. You see a lot of his discourses on YouTube as well. We have Mr. Madhukar Rao. I know him for the last 20 years. He's a former EPFO officer, and now he's an employee side consultant. He really is like a crusader to ensure that employees or the ex-employees, they really have helping hand to get claims faster. So let's see their perspective. And then I would also have our privilege to invite my friend, my partner, my colleague, Prakash Prabhakar, representing the industry perspective and organizing leadership, that how company of 2,000, 3,000, 5,000 employees also have to do this. So, gentlemen, once again, thank you for joining us. And I've spoken a lot, so I just comment. I would want Madhukarji to have his camera on here, if he can.
Yeah, I got a problem with the camera. I don't know anything. The first time I'm appearing.
No problem. So long as we can
First,
hear you, it's okay.
my son did this, and the integrated camera, that is also not there. He went out.
Well, see, I guess, and that's what happens.
Okay, you can see can you hear my voice?
Yes, very much. In fact, so
I cannot do anything more than this. See, this is coming, but my photo is not coming in that.
I think you should be closer to the camera.
No,
then he'll come down.
No, nothing. Where is the camera in this?
No problem. In fact, so we can hear you very straightforward.
Okay,
thank you very much. So we'll do that.
Okay.
So kind of a quick question which I had in mind, and I would want to have, so each one, if you can identify, starting with Madhukar-ji, that what is the one expectation you believe which is currently overstated when we talk about EPFO 3.0, which has generated so much of tremendous excitement, starting with you, Madhukar-ji. If I may request you to first begin, and then I'll go to Govind and Prakash here. So, yeah, what is, if you have to identify, what is the one genuine achievement which this 3.0 has generated?
It is the preparation of PF Chalan. I'm happy with the preparation of PF Chalan in employer portal. It's okay.
Wonderful.
But even before this, I don't know, it is included in the 3.0 or a little early. UAN generation in the Umang app, I think it is completely wrong because see, in the employees are routed through the employers. So in the employer portal, there was an option of generating the UAN. Why it is removed?
Hold your thoughts there, Madhukar. In fact, let's go to Govind. One genuine achievement you feel immediately last 15 days you have done, or last 2-3 months as the 3.0 is concerned, before we just go into
digital intervention. Oh, yeah, you're able to hear now?
Yes.
Yeah. I think the digital intervention, what the BPFO has made so far in terms of employee-friendly, portals, including giving their PF balances and showing with charts and figures, that is actually looks very good for the employee point of view. But of course, from the employer point of view, there are still some challenges, like Mr. Govindaraju said already, that the UN generation is not there with the employer, and sometimes you also said the portal gets slowed down, especially on 14th and 15th. These challenges are there, but from the employee's point of view, I think overall digital intervention has been pretty good done, especially in the last at least 6 months' time.
Great. In fact, so over to you, Prakash. What is your quick, submission on the genuine achievement which you think EPFO 3.0 has?
I think much like most of the programs, this one also has generated a lot of interest, participation, public participation at large. Classically, most of the government programs, people are kind of worried, they draw a shield and they say, okay, fine, we'll figure it out, disinterested. But in this one, I noticed in various groups and industries that there is a lot of interest in knowing that what has structurally really changed. One thing which I would like to highlight is that I don't think even the PF officers right now know that what has changed in the EPFO 3. So we will figure it out, as they are figuring it out, and there is a silos working. It's a little bit fragmented. There is an HO, there is a regional office, and people are trying to decrypt the whole thing and construct what's the EPFO 3 in reality. So as we go, but one thing which is, in my opinion, the most important thing, which is different from the other versions of the EPFO once digitization journey started, is that it has created a lot of interest. Now, one reason why I think this has happened is because there's a real change in the pay wage structures, right? So which has impacted, employees, which has financially impacted employees as well as employers. Now, because of this reason, people generally want to, it's like a benefit of association. So what exactly has changed in the EPFO 3 for the government to bring in the new labor codes also, and how do the two complement each other? So to sum it up, interest, participation, and the desire to understand it better, which I think is missing for all. And I think, Pratik, you are doing a fantastic job. So also India, like IACC and organizations like this, who are trying to create panel discussions, awareness campaigns, workshops, so that people get to, ideally, before the government would have brought something as fundamental and so structurally important, they should have done a series of conversations and things like that.
I know.
And
I think,
that didn't happen.
so let me ask this question actually to Govind, in fact, what is a significant part of the responsibility from the department to employer and employee, just continuing with Prakash is saying about, from an employer perspective, okay, has it shifted this compliance when we talk about, has it shifted from responsibility from the department to employers and payroll teams, or it is still the department when it comes to ensuring compliance now? Because people are still not aware of that. Yeah.
No, I think the compliance has been now shifted to employer, not to the the PF department, because of the digital interventions and modalities. Now everything is left to the employer. Even if you see in the last higher pension rollout, whatever was there, the PF department did not take any responsibility of settling the claims, including the documentation, everything. They all, left on the employer. So if you have to give us a documentation, because PF is sitting from 1952, they should have all the documentation rather than asking from the employer. They should have pulled out from their own database, but they did not do that. So in fact, that is one area which the employer is much worried, because even the data retention as per employers, this one, they may not have the data for 20, 25 years. Rather, the PF department should have.
So good. Then I would want, now I can see very much clear to Madhukar ji. In fact, thank you very much.
I'm very
I,
visible. This is
yeah,
this is the
yeah.
first time I'm coming in a Zoom. The
Oh,
first
I
time.
see.
Please
All right.
join me again and I'm interested.
All right. You've been part of the organization inside out, it's the last 25, 30 years. And now from the employee side, and Govinda's just talking about that the documents has to be from the PF office end, and not the employer end. And now you've been also there in PF office in so long, and now you're also helping the other side of the table. You tell that what is the bigger difference you see in the policy intent, and what is the ground reality of the implementation, especially with the last 3 to 6 months on the PF thing. And also what Govind was telling about the legacy issues. How do you actually try to manage or subvert that?
See, I can say it only from the employer side and employee portal. Okay. From the employer, first I'll tell, I already told that the website is very friendly. It is there after this 3.0 from September 2025 onwards. Now it is going good. And now recently their internal system is modified. And because of that, not much changes in the employer portal. Everything is going good. But there is at the end, in the last version, before September, if we, even after preparing the challan, we are able to cancel it before the payment. But here, I don't know, when it is challan is prepared, we have to pay. There is no other escape. There is one drawback of this. Why the challan cancel is rejection or cancelling or removing the challan is cancelled. That I want to write to CPFC also, that why you would do this? You should give before the payment. If the employee realizes, he can let him correct it. That is the one thing. And as regards the member portal, it is not yet opened properly. I cannot say anything. So many changes they have done there. And because one de-link option was there. If the employee has not at all worked there, zero contribution, zero salary, he left. So that he was able to de-link it. That de-link itself has vanished. See, when they make the changes, they should issue the circular. Not that now in the scheme is also all changed. It is all there in the scheme. Yes, the rules are there in the scheme.
I understand that.
Rules are all there in the scheme. However, when the practical aspects, say for example of de-link is been removed. So they have to issue the circular. Why it is removed? One. And in the challan, the correction of the challan is not allowed after the challan is prepared. They have to issue the circular. It is why it is removed. I can ask in the RTI. I got a list of points which I asked in the RTI first. Then in the simultaneously, I sometimes or the after receipt of RTI, I write letter also. That is also there's another in employee member portal, because I upload claims now more than the challan. I am expert in that claims because the claims is so difficult in the transfer claim, that especially before 2013, before UN started. That transfer link is needed. One is the transfer and the link is needed because he left the service before 2013 and now he has retained the age 58. Okay. So for pension, that service is to be added. It is a very difficult thing. Very difficult.
Correct. So I think so you mean to say that despite technology upgradation, the problem still remains. So even when whatever 3.0 it is still remain. But do you think that is a problem with the technology upgradation, or it is about dissemination of information? I would like to pick up your brains, Prakash. In fact, how should industry and EPFO manage this transition without actually genuine employees suffering? You also have in their experience employees really suffering, as you were saying, 2013 transfer, PF, they don't know the history. Govind was talking about, that 25 years history we do not know. So how should the industry and EPFO actually manage the transition without employees suffering? What is your take? How should they do it?
There's a question to whom?
I was talking to Prakash. In fact, the
question to me. I thought it was to Govind.
No.
That's all right. So look, so Pratik, you know me. I always have a contrarian view on most of the questions. See, I would like to answer this question by asking another question. It's a bad way of responding, but nonetheless. See, the EPFO as an organization must be employing maybe about what, 10,000 people, something like that.
15,000, 15,000.
Sorry, 20,000 people.
15,000 employees in EPFO.
Yes, so 15,000. So I was like kind of close to the number. Now, the question to ask is, see, technology or digital journeys don't work in isolation. They work along with people. And there is a culture. The PF office is known for its culture, classically, all over. Now, we need to understand for digital transformation journey to be effective and to achieve their outcomes, the cultural shift has to happen, which means, so a couple of questions. How many people have been changed or rotated in the EPFO as an organization? I think the answer would be that there's no even thinking about it. Then like, let's bring in fresh blood. Let's bring in, like at the top of the employment pyramid, let's bring in people who can drive a new way of thinking or delivering services in the EPFO department. I have the opportunity. I had the opportunity of looking at people at the pretty senior levels also. That those training modules which are broadcasted, people generally log in and then they are doing their fine work. Like so. So really, the training related transformation. So the point which I'm trying to make is that another big challenge that I personally feel has happened is that the government has really lost out on that big opportunity of doing a process restructuring. They're still thinking manually and trying to do things, digitally. So there's
Right.
a disconnect, so it's like picking up instead of having a holistic integration of the functions and optimizing the process of, kind of contributing, monitoring, and retrieving. I think those are the three big buckets of activities that the EPFO as an organization has to manage. Like they're still thinking sequentially. They're still thinking this. See, as an example, if you had a pension account at a zone X or an office X mapped to an office X, and you moved your life after retirement to Y, then for any changes, any correction, you still have to go to the zone Y. I
Sorry.
understand that in EPFO 3, you could now do it from zone X. Yeah, I understand that, but it's still to be verified. Bulk changes, bulk approval of changes, which is classically the case in many M&A situations. Like if an
That's right.
M&A happens, then there would be like 50,000 people whose jobs would be changing, right? People will be transferring from one establishment to another establishment. So why should this process of integrating the service records be behind that mask of what they call as a VDI file, or very important file, or whatever file they call it, monetary transactions has to be approved one by one. The facility to do batch processing, right? Now, I cannot fathom why something like this would not have been provided right in the first instance of digital journey. Why does it even have to wait till digital 3, like EPFO 3? It should have been done in right at the start. For whatever reason, it has not been done till 2 for sure, and I don't think it is available in 3 as well. From whatever social intelligence that I gather about the EPFO 3 digital journey, the batch processing of these kind of things is still not has not happened in the. So the question really is, what is it that we are trying to achieve in this digital journey outcome? Are we trying to achieve convenience for the subscriber, or are we trying to achieve convenience for the? Ideally, it should be convenience for the employer, for the custodian of the scheme, which is the EPFO, and the subscriber. These are the three important stakeholders, right? The subscriber, the establishment, and the custodian. But it seems that all the effort goes into the presentation of to the subscriber, but in reality, like the ease of doing the job of the custodian or of the establishment is not being addressed, for whatever reason.
I think you put a very, very valid point there. I will come back to that when we talk about the Umang and all. But let me pick brains of Govind on let's go to the wage definition, for example. So there was a proposal restricting PF contribution on the wage ceiling, and the up to only 15,000. earlier they were talking about also that 50,000 should become 25,000 and all, and now it is up to 15,000, and they wanted to restrict the PF ceiling up to 15,000 also. How do you see this impacting employers? And with the wage code in mind, you need to at least have 50% of the total remuneration as basic wages, or the exclusion cannot be more than 50% of the total remuneration. With this, the basic wages for the PF contributes really significantly gone high up, right? And it has really impacted employers also, and more impacting the contribution by the higher wages also. So, what is your take on this particular considerable discussion point on restricting up to 15,000? And what is your take on that?
The EPF scheme 2026, which is recently notified, has already clarified this point that the employer can limit the contribution on 15,000, which is the ceiling wages. But earlier, if you look at earlier, there was no such express restriction because of the Marathwada case, so that was clear for them. But now, because of this express provision, there can be issues from the employees and employers as well, because employers normally, when they read and when they ask people like us, advisors, then they would like to restrict to up to 15,000 so that they don't pay more on the PF. So that is one. But however, in such a case, the employees may be dissatisfied and it may lead to disputes as well, because if the Provident fund contributions are actually paid on actual salary, actual basic salary, which is 50% or whatever it is, whatever the fixed at the moment, then the employee is going to get more contributions from the employer. Now, suppose if the employer comes up with a decision as per the EPF scheme and says, I will only restrict to 15,000 rupees, then as a retirement fund, the employee is going to lose. And if it is part of if it is part of the CTC structure, it is already there, then the employee is going to take a dispute on that. So from the employee point of view, it is a dispute. If the employer has reserved a right to restrict in his CTC letter, then of course he can do it. But if he has not done it such a right, then definitely employee is going to raise a dispute. So there is a dissatisfaction from the employee side, and though it helps the employer, he can utilize, but it is going to bring a lot of disputes on that. So better would have been a very
Got it.
Hello.
Yeah. Pratik ji?
Hello, Pratik.
Not seen. Pratik is not seen.
Govindaraju, am I audible?
Yes, you are audible.
Yes.
I think he may have a tech glitch. The missing OTP phenomena.
So basic view is because of this express clarity now. I would say this is from the employee's point of view. This is going to bring a lot of dissatisfaction and maybe good for the employer. But there should have been some proper clarity on that. Though there is a voluntary provident fund contributions possibility is there. But now, if employer is paying on higher wages, he will definitely try to restrict on the ceiling wages to minimize the contributions. So that is going to have some issues between the employer and employees. Pratik, are you back?
So, while Pratik ji is stuck, what we can do is we can take up questions from the audience. So we have quite a few questions there.
That would be
we can
better.
start with those questions. Yeah. So Pramod ji has asked, the EPF scheme 2026 permit employers to make additional voluntary PF contributions under paragraph 19. It says the current ECR does not appear to have a separate field for such contributions. How should employers report these contributions in the ECR?
Sorry, I just got
You're back. Okay,
disconnected.
good. So,
I'm sorry.
Over to you.
No, I was asking about this. How the employers would have this section 124 if the basic wage is 50,000 now up to 15,000? Will it violate? Not violate? Of course, we know, but for the benefit of the lot of members here, will it violate if they restrict that? They draw the line there up to 15,000.
Pratikji, it's a very good question because Section 124 is being extensively talked about after the Code on Social Security has been implemented. And people think that because of Section 124, the employer, there is a prohibition on employer for realigning the salary structure. But in my view, if you look at it may not be exactly the same way because Section 124 is a exact replica of Section 12 of EPFO and the Miscellaneous Provisions Act 1952. The objective of that provision was if the employer is reducing the wages to reduce the contributions and the charges, then there is a no go for employer. But that is only up to the case of ceiling wages. If the employer is paying up to the ceiling wages or more than the ceiling, according to me, there is no restriction for the employer to realign. Okay, or the Section 124 prohibits that. There is no such a condition is there. But only when the employer is trying to reduce his contribution when the basic salary is less than 15,000, which is practically not a case because today's minimum wages itself is more than 15,000, and in Karnataka it is more than 20,000, and Delhi it is more than 23,000. That situation is not there. But only when the problem can be for employer is when the wage ceiling goes up. Today is 15,000. I think there is a proposal before the government that this should go up to 25 or 30,000. When in such a case, that time when the employer is trying to realign to reduce his wages, especially on the backward integration, that means if the employer has already got basically, the inclusion is more than 50-60%, then naturally he would like to align to 50%. In that case, if the ceiling, if this that wage comes less than the ceiling wages, that time it is a prohibition for him. But as long as the employer is contributing up to the ceiling or more than the ceiling, then there is no impediment from the Section
Got it.
124. Yeah,
Good.
so that's a
And
very
you
clear understanding.
correct. You put a very important point. Now there was a earlier court cases also there. If your basic wages is around say 16,000, you can reduce it to 15,000, but you're already contributing on 16,000. That's number one. But
Yeah.
if your minimum wages for that particular state is say 18,000, 19,000, we would recommend and we would suggest, and Govind, correct me if I'm wrong, to have your basic wages aligned with minimum wages of that particular state. While it is not a compulsion, but is recommended because there are many case laws earlier in past, and because of the savings clause, those case laws still prevail, even if the Code on Social Security is new and things around it. The savings clause and repeal clause, all the case laws and notification of past will also prevail, right? The correct thing is, which I correct me if I'm wrong, and is for the benefit of the team members here, that if your PF, if your PF you're contributing 16,000, you can do 15,000. But if your minimum wages is higher than 16,000, then it's recommended that you contribute PF on par with minimum wage basic. Is that correct?
Yeah.
Go ahead.
Yeah, it is good. But what happens? Yeah, what happens when such a recommendation is made is accepted? Then, because of the appropriate government notifying minimum wages in different states, then that ceiling wages will be different for different states. So that will actually bring some kind of dissimilarity or not a state situation. That may not be the correct approach, but the wage ceiling has to go up somewhere up to 25 to 30,000. That should be the solution. Different minimum wages at the different state level
Yeah.
employers. I don't think that recommendation we should raise to
No,
at least
no. But
25 to 30,000.
now
That
that
will take away the problem. Yeah.
I think that solution has not come through because now the recent notification is now stuck to 15,000 only. Let me go back to
Yeah.
Madhukar B here. You were talking about UN generation through Umang app. Now it is there as a possibility. Early it was not there. Only online you can go. So now EPF on this 3.0 has introduced UN generation through Umang app. You also told about that, and I think Prakash also told about that. It's more about subscribers' point of view. It is made more easier. But do you think, even if it is UN generation through Umang app is there, do you think what would be the initiative behind this, and what are the practical challenges you see? It is there in the implementation?
To me, it is a question.
Yes, Madhukar
Please give me 3 minutes time, 2 minutes time to start with the ID, member ID and this
Go ahead.
UN.
Go
In the
ahead.
2010 before, it was only member ID. And 2013, that UN started. In 2010, their computer system started. All India Network Computer System started. So in the 2010, I went there to the head office Delhi for the training also 2 times, and 2009, 2010. At that time, they took the amount, only the these employees live amounts. During the 2010, only I asked them, see, in the program, you have also to take the member details, their date of joining, age, everything. From the form 9, they told we have no plans for that. So in that 2010, only amount is taken. Then that is one thing. That is big. I'm telling about this even in 3.0, they can do it well for the present and future. They have not repaired the old ones. Again, in 2013, when the UN came, they gave the UN allotment only to the present, who are present in 2013. Okay, I don't know which month it is in 2013. My question is,
September 2013.
September 2013. For example, 6 crore was there. Okay, but however, there were about 3 crores unclaimed account. Okay, but there was an account there. UN not allotted to that, and even before that, scheme certificate was issued. They didn't include the scheme certificate also. Now also they are not included, the scheme certificate. These are the lapses of the 3.0. The previous records, they are not reported, and they are claiming of giving the money, old money, to the employees. Those employees, their address also not there. Before 2013, EPFO did not have the address of any subscribers. Then how can they find them? And because of that reason, transfer claims could not be done. So now again, in the UN, in the Umang app, my suggestion is to government is, let it be there, but parallel, when in the employer portal, it should be there. Employer portal, there was an option for the employer, because employees are routed through the employer. Correct. Then how you remove that? How you remove the rights of the employer, of his own employee? He has to manage them. As Pratik told, they are from different places. Hundreds of employees are joining. How the employer can generate when employee is not available or not? Without that, this is a very serious of. I have lodged a claim. I lodged a complaint. That is going on. That complaint is going on. That when the employee does not give the event and employer is not able to pay, that is a prosecution. He is liable to be prosecuted under IPC also. So allow the employer, now also allow the employer to generate the event. That is my point.
I think the reason why they done is, my submission is that the impending problem which was there in past, that now the responsibility shifted to the employee, that they generate and they do the UN and not the employer as a bulk thing. Because if the employee has his own UN and all, that time only they will be recruited and they'll be selected for the job and all. If they do not do through their own Umang app and all, they'll not do, because employers are really faces issues. What you were saying, Madhukar, that remote places and all, and they have to be really chasing the employees that please update, and the whole month goes and still he doesn't do, and then remains prone to prosecution. So I think the move with this behind the initiative is that it is now employee or that particular candidate's responsibility that you just ensure that the UN is there in place, then only you join the job. This is what my thinking.
One point, I replied in the social media, just for a follower or something like that, that I told that the HR people, see, there is an account section and an HR section. I have seen in many companies, during my tenure as an enforcement officer, I visited so many companies, about 100,000 companies. And there was a code, what I felt and saw is that there was a difference between the HR and the accounts. There is no coordination. That is, the recruitment is HR. Accounts say their UN has not come, like that. There is a communication gap happens between the HR. So the solution I am telling you, communicate as far as possible, that while recruitment, who is recruiting? Pratik is recruiting. So Pratik, please see that while recruitment, he's sitting inside front of you or on a phone. You ask for the UN first, then only give the job. Appointment
That's what I
letter.
was trying to.
Issue the appointment letter.
I think that's what exactly I'm talking about, and Umang app as well. I would like to ask a question to Prakash here. So you see there, how practical, it is this. How practical is for the organizations or employee to have the Aadhaar-based onboarding for organization? Where hundreds or thousand employees are there, and now they have to do through Umang. Do you think that is still practical for Aadhaar-based and linking, which they had started for 3-4 years back?
See, there are two, in my opinion, there are two aspects to it. I think I understand the thinking of the government when Aadhaar came into existence, when it was conceptualized, was to have one singular identity for an individual, which can move with the individual across various platform performances, places, irrespective of this thing. It could move from one place to another.
Pratikji, are you there?
Yeah, I'm very much there. I think Prakash froze, right?
Yeah, he froze. Pratikji, I have to leave by latest by 6:10. Okay,
Right.
so
All right. So fine. So let's do a quick. I think his connection. So let's go and do a quick rapid fire. I think we just wanted to have one quick rapid fire.
Pratik,
And
just one last question. See, I have seen in the Dhule, Nandurbar, that side, and textile industries, they want today itself 100 employees for loading and unloading. Okay, now you are in Bombay, you are doing all HR. How will you recruit that 100 employees with UN and Aadhaar?
correct. That's right. So okay,
I
fine.
think
So let's see.
I dropped, but I'm back.
I know. Yeah. Thanks. So I think we will keep on talking, but I think we will also want to take some questions here.
No, wait. I haven't finished, Pratik. I haven't finished. Wait.
Go ahead.
I wanted to finish that other thing. So the original thinking was to use the other thing, but and prior to that, obviously, like employers were validating people that this person is, Mr. A is Mr. A, right? And now government says that Mr. A will be identified through the UN and the other and things like that. Now, if you say that personally, I am like, in my opinion, because other data have been found to leak through, etc. But to replace that, you have to find another solution. What is the other method by which you will, and that's like a question. It's a little bit philosophical statement to make, but that's a question with which the whole country is struggling right now. That what identifies an Indian, like whether it's the election card, whether it's the PAN card, whether it's the driving license, whether it's the Aadhaar. So the best answer to your question could be that any of these things could be used for the identification of an individual, right? Which
Correct.
is, but to limit it to, and because Aadhaar is classically linked to a telephone number, right? So which also
That's right.
down to a telephone number, right? And all the, the related aspects. So now in an age of artificial intelligence, for example, if you were to say that, okay, upload your driving license with your picture on it, and driving license can be used to validate that you are an individual, then you're not risking your biometric data, and you're also getting free from the nuances of the OTP based. But that's like a new second stage of digital maturity of the EPFO 3, right? But I think you need to have a mechanism and method for identifying that a person X is person X. Earlier, it used to be employer validating that I am the employer. I confirm that this is Pratik Vaidya, and therefore chances of fraud, etc. So all related accounts are moving along with that in a particular manner identified.
I think I remember in a decade and a half, I think, Govind, you aware, or I think, of course, Madhukar Ji will be aware, we had something called NSSO, that is National Social Security.
Yes.
Yeah.
There was
a national social security number, which is on the lines of US's social security number, SSN.
Yes.
And we started and all, and it's a big flop. I hope that EPF 3.0 is also not that, because a huge UN cry and digital transformation and everything, which they had started, and that really.
So only then they started UN concept, but that was actually there were a lot of camps and other
Correct.
things, but
So, okay,
somehow it got
last,
dropped. Then after that they came up with UN concept. Yeah. I
so
think
so,
Pratik, I think if there are important questions from the audience, I think
let's check that. Let's check
should
that.
close
I
it.
just want to have last question. I'll want to have last question here. Anyone can answer here. Like, should
Yeah, because
EPFO
yeah,
have live dashboard showing system availability, claim
yeah.
pendency? You know how you have in Swiggy apps and things around it. Live dashboard is there and expected processing timelines. You think it should be there as part of EPFO, or it should be on the Umang app?
No, it is there in the EPFindia.com. It is there. Dashboard is there.
Yeah, that's yes. No, I
It is
think
there.
it is a EPFO dashboard is a good.
Great. All right, let's take some questions, please. Here, where are the questions? Can someone tell what are the questions here?
Yeah, in the chat box. Yeah.
Can someone read out the question, because I'm not able to see in my thing here. A lot of questions actually there. Vishnu, can you help there?
Yeah.
Okay, I have some questions.
See, the first one, you're able to hear me, no?
Yes. So I will take the questions here. Malvika Kapoor, she says that I work in UK. I tried to generate PF details from PAN and registered India number, but it says UN not found. I have the PF number. Is there any ways they can retrieve? She's struggling. So what is your take on that? I think Govind or Madhukarji, any one of you can answer this.
Is an employee of Indian company.
She's saying that she works in UK. Maybe yes, employee of the Indian company. Maybe
international worker. Okay. From Umang app, how can, it can be? It is allowed. No, Umang app is allowed foreign also.
So now they can do it through Umang app, right?
Yes.
Okay.
Yes.
All right. Someone, Govind, you want to just take this? Of course, not related to PF, but he's saying that what is the solution of 2 days full and final settlement? How do we manage that?
Yeah. See, there is a legal mandate now to settle, the wages. See, that's a full and final settlement is a incorrect understanding. What the court talks about is the earned wages have to be settled in within 2 working days, and in case of leave encashment, there's a 2 working day condition is there. But in case of other dues, including your bonus has got 8 months time and gratuity has got 30 days time. So therefore, full and final settlement within 2 working days is an incorrect understanding. First of all, okay, only earned wages you have to settle it within 2 working days, which is 48 hours as per Code on Wages 2019. But however, what our advice is, whenever employee resigns, there should be an acknowledgement to the employee stating that to hand over everything, responsibilities and assets. And once it is done and the clearance paper is submitted to the employer, then the settlement will be done as per law. So, but however, once the employee does this full and clearance certificate, you have no option but to settle the wages within 48 hours. So you cannot hold it. You cannot hold it.
I have one more question. I don't know whether any one of you guys can just answer this. That the organization is process of, and I think we have discussed this here. They are in process of onboarding significant number of employees simultaneously. Is there any bulk onboarding facility now or a special procedure where they can onboard, do the EPF registration? I guess no, because the employees have to be individually done and not bulk process.
Bulk is not there, Pratik.
Yeah, I know. Bulk is not there. So just to answer the question there, bulk is not there.
One funny matter about UN in Umang app.
Yeah, go ahead, please.
You may not believe it. For a 15-year-old who is going to college, unemployed, he can also get the number. A 100-old man sitting in house also get a UN number. And I am a retired for EPFO doing consulting. I got a UN number. It is there with me. Every week message is coming. You add to any establishment. So if anybody give me the job, I will add.
Pratik, we overshot the time very significantly.
Anybody
know.
Quickly finish it, Pratik.
I think yes.
So,
I think
so what we
the
can
rest
do
of the
is
question. Well, the rest of the question, I think we already answered by the presentation. Last
So
is
what
about
we can do
e-sign,
is,
but we can. Yeah, please go ahead.
what we can do is we can actually do the vote of thanks and we can hang around, and if people are around, they have some specific questions, we can continue to hang on. But people who have scheduled a time, if they want to move
I
out, yes.
I understand. Yes. We just got overwhelmed with all the things. Thank you very much for all the speakers
10
here.
minutes, 10 minutes, okay.
Yeah. I think we've done that. So, okay, go ahead, please, Tajinder. You
Let's
can.
conclude it, Pratik ji.
Yeah,
I
so
think you
let's
should
conclude it. Yeah.
conclude it. Yes.
So thank you. Good evening, everyone. Today's discussion has reaffirmed that EPFO is more than just a policy update. It represents a significant step towards modernizing Indian social security ecosystem. While reforms bring both opportunities and challenges, informed dialogue such as today's equip businesses, HR leaders, and professionals to embrace change with greater confidence. As we come to the close of today's insightful discussion, it's my privilege on the behalf of Indo-American Chamber of Commerce West India Council to propose the vote of thanks. First and foremost, I would like to express a sincere gratitude to our esteemed speakers for sharing their valuable knowledge and practical perspectives on the subject that is both timely and highly relevant. I think they were so informative that we really didn't want to close the sessions, but for the respect of time. A special thank you to Mr. Govindaraju N.S. for providing industry-focused insights into the evolving EPFO landscape and its implication for employers and HR professionals. Our heartfelt appreciations to Mr. Madhukar B, whose decades of experience with EPFO organizations offered us a deep understanding of regulatory framework and the intent behind these reforms. We also thank Mr. Prakash Prabhakar for sharing practical viewpoints and business perspectives that will undoubtedly help organizations navigate the changing compliance network. To our moderator, Mr. Pratik Vaidya, thank you for steering today's discussion with greater clarity, balance, and engagement. I would like to extend my sincere appreciation to each one of our participants. Your enthusiastic presence, thoughtful questions, and active engagements are what makes IACC Thursday Insights meaningful and impactful. We hope today's discussion has provided valuable takeaway that you can apply within your organizations. At IACC, we are committed to creating platform for fostering knowledge sharing, meaningful dialogues, and help businesses stay ahead in ever-evolving regulatory and business environment. We look forward to welcoming you to many more editions of IACC Thursday Insights and a lot of initiative taken by the Chamber. A lot of other initiatives taken by the Chamber. A special word of appreciation goes to IACC Secretariat Vishnu and Parva for their dedicated efforts in planning, coordinating, and seamlessly executing today's webinar. Events like this are made possible through commitment and teamwork of the Secretariat, and we sincerely thank them for their hard work behind the scenes. On behalf of Indo-American Chamber of Commerce, thank you once again, distinguished speakers, moderators, participants, and everyone to make this session a success. We hope to see you again in upcoming IACC programs and knowledge sessions. We are staying back for another 10 minutes and trying to answer questions. So people who want to drop out because of commitment, it's fine. But I think we'll take another 10 minutes and address questions. And we'll close after that. Pratik, over to you.
Yeah, thank you so much, in fact. And it's a really privilege, to be part of the American Chamber of Commerce, and we can do meaningful such contributions, and it's good for everyone, your members and everyone who joins. And people should join the Indo-American Chamber of Commerce for a lot of other benefits as well. I think I'll take two last questions, Madhukar ji and answer this. So there's a question by Smarty here that if the employee was not eligible for pension, okay, how did the PF portal accept the pension contribution at the time of challan generation and deposit it with the government? Now the PF transfer claim has been rejected because pension contributions were deposited for an employee who was not eligible for PS. So what to do about the contribution, and it is incorrect, and how did the PF portal first accept that? I think there are transition issues here, but anyone want to just answer this?
They started with the 2014. Can I say with 2 minutes?
Yes.
It started with 2014. Above 15,000 new employees, not pension members. Why not pension member? It is a question. Now also I am asking, everybody should have been given pension membership. That is one aspect. Second is that there is a lot of confusion, and in the system also they did the modification. All in one company pension membership, another company not there. In third company pension membership, fourth company now in the fifth company contribution is there, and he closed. He left the employment. Now the employee is asking from 2014 some employment EPS there not there, but now in the present one, in the last 1 year or so, the system is upgraded. It will not take who are not the pension members. It will not allow. It will not allow. It is in the present one. But solving the old one, you have to run like anything to different of you. See, the employer will not cooperate because the employer has left the service. And you have to approach each EPFO, 4 EPFO office, one in Chennai, one in Tamil Nadu, one in Bangalore and Mumbai. So you have to approach each EPF office to do the needful, and the employer should contribute. He should cooperate. Employer should cooperate. What the employee says is that at that 2014-15, the employee is not cooperating. Then how to solve this problem?
Correct. I think there's an issue, in fact, and that's the reason I've been keeping on telling, and I'm in a presentation that the claims doesn't start when the employee submits the claims, but it starts when he joins. So while the past things and legacy issues are still there, but people need to ensure at least from today onward that things are in place. Last question, Arpita Bishnoy is asking, can we voluntarily enroll an employee for PF contribution during the course of the employment, even if they are not eligible? The portal only limits onboarding from date of joining and not otherwise.
See, for employment is necessary. Only when the employee joins the employment, from that day he can join voluntarily if his wages is more than 15,000. But if it is basic wages is less than 15,000, it is mandatory for the employer to cover. But if his wages as a first-time employee is more than 1,000, then it is voluntary for both employer and employee. Then earlier it was paragraph 26. There was a possibility for both employee to jointly approach the PF department and joint declaration. The same process is now also has been brought. So, but employment joining is necessary. Without the employment, voluntary only employee is not possible. Both have to agree.
So date of joining in the terms is important, but date of membership. Can date of joining and date of membership be separate?
Okay, possible. It can be both separate.
Okay. All right. Okay.
Yeah.
I think that's it. In fact, I just want to thank everyone here and wish to and Parva, if you have, you get more questions, we're happy to, just take those questions and just happy to answer. I'm sure that Madhukar Ji and Govind and us, we will be able to
send it to us. Not an issue. Yeah.
Absolutely.
Great.
Absolutely. We'll do that, sir.
Yeah. Thank you.
Thank you very much, and
you all.
all the best, everyone. Bye bye. See you.
Thank you.